Good afternoon, everyone. In today's video, I'll share one trade idea that is fairly, I would call it low probability, something we don't usually do, but it's also cheap enough, and I think it's a move that we're anticipating, where if we get it, it'd be a nice lotto sort of play. So I'll share that play, how I broke it down, what's my thought process behind this lotto, and what that setup actually looks like. Now, starting off here first, this is a chart of the S&P 500. I've touched on the trend line. I expanded that with today's activity. It's a never expanding trend line, it feels like so far. And we're still waiting for this to either break down if we're continuing this bearish trend, or if we break above this previous resistance, at least with some sort of force, then that would suggest that, hey, we're going to see a little bit more bullish continuation. Now, my bias, as I mentioned in the last video, is towards the downside. However, the idea that the S&P has just been climbing here, does this relief rally continue? Is this really just a consolidation before we break out to the upside? I think you'll also find there's squeezes that are forming with positive bullish momentum. So all around here, I think there's factors where you might be a little bit more cautious around this upside break. So that's where trying to create this lotto idea comes in, is it definitely needs to have low risk associated with it, but with that low risk also comes, I think, the lower probabilities. Now the move is, I'm trying to target a break below this trend line and looking for that liquid area of 400 to try and craft a butterfly around. Now the one thing that I think is going to be different here is, given that there's a squeeze, given that there's all this momentum, if you imagine that momentum now starts to decrease, I imagine that we're not just going to stop at 400 this time around. We've already tagged 400 now multiple times. It's no longer a price that, quote unquote, we haven't discovered. So to me there, I think there's potential where if we do break below 400, we're just going to keep falling here. It's going to be a stronger push to the downside, as opposed to something where we hit 400 and now chop around sideways, maybe see any of that resistance. So what all of that means is, I'd like to protect myself where even if this goes, say, all the way to zero, hypothetically, that there's still no downside risk on this trade. Of course, zero on the S&P, not really realistic. Now, if I start by showing you the trade that I think makes sense, so I'll come into the Analyze tab. This is the overall idea of that butterfly. I have a 400 pin right here. Then you're buying the 397 and the 405. You'll notice these are not equal wings. This is a $5 wide wing, and this is only a $3 wing with that 397 400. That's currently going for a debit of about 76 cents, meaning your max risk is 76 bucks per each one lot, or I guess one set of butterflies that you trade. Now, if we take a look at what this looks like on the risk to reward, max loss is that same 76, so minus 76. If we overshoot and we just continue plummeting, meaning no downside risk, we cap out our gains at 124. So just on that basis of comparing the 76 to the 124, the two extremes at least have you where your risk to reward is skewed in your favor, where this low risk idea makes sense. I'll also talk about why I chose the June 17s in just a second. But before we do that, let's say if you did pin exactly at 400, there your max potential profit is in the 420s, 422 I think it was. So you definitely have a lot of upside as well in terms of max profit if you pin perfectly at 400. Unlikely, but of course not impossible. Now, one last thing we'll talk about is why June 17th. So currently, S&P is trading at 411. We had 400 to the downside that we were looking at, which is a move of about 11 bucks and 22 cents using the current price. So let's call it 11 bucks. Now, if we come into the trade tab, we're looking for where our expected move is within that same 11 bucks. Now, of course, today's expiry, not there. Tomorrow or Friday's expiry, not there. Then next week's expiration 5 days out, only 8 bucks. So by the time we get to the 11, we're in this plus or minus 13, and that's the June 17th expiration series. So that's where this entire idea came about, of targeting the June 17th, having that 400 strike, looking to try and see if this consolidation is now buyers really leaving, get a breakout to the downside. And to me, if we get that downside breakout, I think that continues where I'd like to prevent any downside risk. So hopefully this is a good trade idea for those of you that are interested in some sort of a low risk lotto type of options play, where you're still looking to play the overall trend. We're at previous resistance now, where previous support turned into resistance. And this, if you were to look at any textbook chart of the S&P, would be, I think, where all of the gurus would tell you that, hey, you should have shorted here. This is slamming back into previous resistance, and we're looking for that trend to continue breaking below previous lows. So that's the idea I'm looking at. Hope it helps. Take care, everyone. Good luck trading, and I'll see you in the next update.